Welcome back. It's Business 360 and my name is Blyden Ukem. And now let's talk about global economic standings around the world, but beginning with Nigeria's economy. Nigeria's headline inflation eased to 33.4% in July 2024, slowing for the first time in almost 2 years, down from a 28-year high of 34.19% in the previous month, reached amid the removal of fuel subsidy and a weakening local currency. This is the first time the country's inflation has cooled down since December 2022, when it stood at 21.34% according to the National Bureau of Statistics and its latest Consumer Price Index and inflation for July released. This represents a 0.79% decline compared to the 34.19% recorded in June 2024, and the decline was in line with the expectations of financial analysts who projected that the country's inflation would cool off from July to August. Now quickly, let's look at the chart indicating Nigeria's inflation rates before my guest joins the conversation. The charts indicating Nigeria's inflation rate. Well, the chart indicates different possibilities. Inflation in Nigeria has been in that trajectory for the past 1 year, getting to a heightened level of 34.1% before dropping in July to 33.4%. And now my guest joins the conversation, Dr. Wisdom Enang, a senior energy consultant and analyst. We'll be looking at the state of inflation in Nigeria and the factors that cause it, especially from the energy sector. Dr. Enang, good morning.
Good morning. Thank you very much for having me.
Good to have you. You've seen the data and the indices that's happening in this one regarding Nigeria's inflation rate. For the past 1 year, in fact, since 2022, August thereabout, inflation has been high in Nigeria. But just this August, according to what the analysts had said and financial expert had projected, in July, inflation dropped from the previous standing, about 34% and now to 33.4%. What do you make of it, this easing on inflation?
Right, sorry, the line's really bad. I can't hear you.
Okay, Dr. Enang, I was saying you've seen the data that is out regarding inflation in Nigeria, and one of those factors that had caused inflation to be so high for the past 1 year plus, getting to 2 years, because the last time we saw inflation dropping in Nigeria was in 2022, but it's been high. Many said, according to different reports, that it was as a result of that fuel subsidy being out and naira devaluation. So I'm asking, when you look at the ease in inflation, dropping from 34.19% previously, and now inflation for July is standing at around 33.4%, what do you make of it? One that could be sustained in the country?
Okay, so, I'm trying to make out the question, but the thing is, right now, the three critical factors that are responsible for inflation rise, like we've seen, is the exchange rates. We've also had that's the naira devaluation. We've also had the fuel issue because of the increment in the price of fuel, and as well as currently we now have the electricity tariff. And of course, the normal inflation, food inflation, for example, due to scarcity. So those are the key things that have, got into increasing Nigeria's inflation profile. However, at the moment, we are beginning to see inflation slow down, and that is largely to do with the fact that the undulations in the FX market is not as bad anymore. The fuel is still a problem because the variance of fuel pricing is so high. Up in Akwa Ibom, you hear some places sell 1,000. In Lagos, you can get it for about 620 on a good day. So I think another factor that is going to calm inflation is because the excess liquidity in the market is being mopped up by the use of very high interest rates to make sure that people are going to save more than spend. So we're beginning to see results. As of the last data I saw, inflation is slowing down very, very well, on a month-on-month basis, and that's sending some very good signal for the country ultimately.
All right, Doctor, and a good perspective there. But let's look at a critical aspect which we've talked about, the very fact that our fuel prices are high. You're an energy expert, and you understand more around this particular area. What could be the possible solution to this fuel debacle in the country? The price is getting higher, complaints from local refineries, one way or the other, Dangote refinery taking center stage, and there have been also this projection from the president, the order from the president, saying that Dangote and the rest should get fuel in naira, not in dollars. How does all of these play a factor and also could cause a solution?
I mean, when it comes to reducing the price of fuel, if that's your question, what we really need to do is to, increase supply. Once you have supply matching the demand, you definitely will have a reduction in the price of fuel. Now, I do not agree with the NMDPRA that the way to go is to actually, import more, because that was the argument that they still have to import as a way to checkmate Dangote's monopoly or the tendency for monopoly. I don't believe that's the way to go, because importing to checkmate monopoly is more like you are, going to disadvantage the Nigerian economy. For every barrel that you import, or sorry, for every liter of refined product that you import, you have inevitably exported about 85% of the potentials for our jobs and economy to grow if we had refined it inward. So it's not just looking at the monopoly. The monopoly is one concern. Are you going to look at the monopoly and then trade off the opportunity for development? What I think is the answer is we have domestic refineries who can go to meet our 70% consumption rate. In fact, if we look at it closely or carefully, we can potentially become a next exporter of products. What we need to do is to ensure supply. It is good that we have told them that we are going to give them crude in naira. That's fine. That's good on paper. But what's going to make the difference is if we can boost our supply. Right now, our supplies are hampered. For every barrel we take out from a production standpoint, we have to pay off our, we have to pay off the, the forward sales contract that we have at the moment. We still now have to give the JV contracts and the, the production sharing contract partners their own part of the, production. In addition to that, we are still sourcing for loan. As of today, we are sourcing for a $2 billion loan that is crude backed. So how do we now have crude for the domestic refineries? So the only way is to increase our production. And we can only do that by curbing, crude oil theft, by enhancing our production through primary interventions, production interventions, and then by, improving our facility reliability. Those are some of the ways we can do it. And exploring new frontiers and making sure that we assiduously chase these people who collect oil licenses to develop and bring new fields into life. I think this is the only way we can really do it within the short, medium, and long term. So, and if we can bring in new supply, already the market is deregulated, so it's very apt for people to come in and invest. It's going to now give us a real sense of comfort, where we will be able to have, production for domestic supply.
All right, Doctor, many ifs in that direction you've talked about, especially in the area of supplies. Let's look at something. Recently, Dangote refinery and other local refineries came out in that direction of supply and said, look, we're not getting enough raw materials, we're not getting enough crude in order for us to be able to refine, and the projection according to the regulators compared to what is needed, Nigeria is far behind to what they could give these local refineries. But one area I want you to touch on, being that you've really indicated that this is an area that could be a game changer to Nigeria's economy, fuel prices and fuel supplies, is this. Many politicians have spoken about giving, in the fight of fuel bunkering like diesel bunkering and the rest, giving some of these modular refineries licenses to refine. You think these are possible ways that could also add to improvement in that sector, talking about supply and availability of these petroleum products?
I mean, for me, I think we need to look at this holistically. Yes, we don't have enough crude to supply the Dangote, and I think the first thing first is how do we ensure that every barrel that we give to the Dangote for now is able to give us value? Because I'm less concerned about us inventing crude where there's none for him. I am more concerned about, for every barrel of crude, are we able to take credit in terms of price for the barrels of crude that is going to be given to him? Because the last thing he wants is the Dangote refinery taking whatever crude it takes from Nigeria, refining it and still selling his fuel to reflect the same prices as if he imported this crude from abroad. And that means he makes a lot more profit than we Nigerians had expected. So this is the conversation I'm interested in, because we clearly do not have enough crude for the Dangote refinery. But speaking about modular refineries, I think we need to bring them in. But when you bring them in, before you take a final investment decision for each modular refinery, you need to make sure you have, the feedstock needs to be guaranteed and the markets for supply needs to be guaranteed. The question is, how are you able to guarantee the market, the feedstock, if we are already having shortage of supply? This is exactly what is making a lot of investors hold their feet cold. Now, let me give you a little bit of context again. Let's go back in time and look at why something like some of these LNG projects never came to light. A lot of those LNG projects did not come to light because they could not guarantee the feedstock of the gas. And even LNG Train 7 right now is telling us that they don't have enough feedstock of gas for that Train 7 phase. So there are a number of things we need to fix from our feedstock supply standpoint to make us have the right production. Giving licenses to modular refinery is not the problem. It's the feedstock. The feedstock has always been the problem. Recall, part of why the Port Harcourt refinery has been going through a lot of turnaround maintenance is that they keep underfeeding it and other refineries with a very low operational feedstock level of throughput, and it always breaks down because that feedstock is below what the refinery should be getting, and so there are a lot of vibrations in the system and system breakdown. So we need to address that. That is actually the crux of the matter.
Many problems spotted there, Dr. Enang. But finally, final word for you would be this from my asking in this direction. If you were to be part of the presidency or part of the NNPC, what would be that first decision or that first thing that you could do to bring solution to the sector, talking about the energy sector, which in turn would bring lots of solution to Nigeria's economy?
I think we need to really increase our production. I think a state of emergency has been declared on that, but there's a lot more that needs to be done for us to get to that point where we're comfortable. I think the president too also needs to really look at the nuances of some of these agreements. It's not enough to say we are going to sell a 450,000 barrels, which are imaginary, by the way, to the Dangote refinery and other refineries in Naira. What are the nuances? What are the dollar nuances? Because, of course, there are dollar implications to this, supplying these volumes at the Naira price. And how do we do that? What are the consequences? And also making sure that how do we price in the effect of these so that these guys that are ending up selling products will sell it in a price that will reflect the fact that they've gotten the crude at a discounted rate from the Nigerian government, and it will benefit the Nigerian people. Otherwise, you're only subsidizing a few people, and it will be to the benefit of their pockets.
All right. Thank you, Dr. Wisdom, and good perspective there, looking at the energy sector in the country and inflation.
Thank you. Deeply appreciate.
Well, we'll hope to have Mr. Enang some other time at a wider perspective and spectrum regarding talking point in the world of business. And while still looking at food inflation in the country falls. The reduction in the prices of gari, fufu, milk, and other items pushed Nigeria's food inflation to fall by 39.53% in July 2024 from 40.87% in June of the same year. On a month-on-month basis, the country's food inflation rate in July 2024 was 2.47%, which shows a 0.08% decrease compared to the 2.55% rate recorded in June 2024. The National Bureau of Statistics (NBS) explained that the fall in food inflation can be attributed to the decline in the average prices of gari, fufu, tin milk, mudfish, fresh fish, date palm fruit, watermelon, turkey meat, and minced pork. Meanwhile, on a year-on-year basis, July food inflation was 12.55% higher compared to the rate recorded in the corresponding month last year. And quickly, let's look at the charts indicating food inflation in the country. Food inflation, right from September last year, was at a slower level, just below 31%, but began to add up as inflation in the country was increasing. And by January 2024, food inflation had gone past 33% in the country, approaching 35% in Nigeria. Well, speaking about that consistent trajectory upward, inflation last month, food inflation last month had gotten to about 41%. But just as inflation has eased in Nigeria, food inflation has also eased in the country, a little closer to 39%, as we spoke about. Is a story about all of this in the world of inflation in Nigeria, and many Nigerians and analysts would be expecting a further slowdown in inflation rates in the country, which indicates the cost of commodities coming down and the value of the naira strengthening. It's been the much we can look at in the world of Business 360 this morning, and we draw the curtain in today's edition of Business 360. Thank you for being a part of it. My name is Vladimir Kim, and thank you for watching.